Hi, this is Rob Waller from Business Loan Services, and I want to continue the short series of videos I've been doing breaking down the coronavirus business interruption loan scheme. Here we are at the end of week one. How is it doing? Well, here we are at the end of the first week of the rollout of the coronavirus business interruption loan scheme. How has it gone? Well, I think it can be best summed up as work in progress. So what have we seen during this first week? Well, we've started to see over the last couple of days, most of the main lenders on the scheme starting to roll out their eligibility criteria. Now, one bit of criteria started to come out that wasn't there before, a bit more of an understanding on the maximum loan amount. Now, the scheme has a maximum loan figure of £5 million. However, there are now two other criteria which have also come out. The loan can't be more than 25% of your annual turnover or more than double your annual wage bill. Now, there has been some change in criteria over the last couple of days, particularly around the need for security, particularly directors' guarantees. And there was a great outcry in people saying it's not fair that directors of companies would have to give personal guarantees for these loans, bearing in mind what exactly they're for and the additional risk that borrowers are taking. And there's now a bit of a groundswell developing, and most of the high street lenders certainly have now said for loans up to £250,000 typically they will no longer require personal guarantees. However, loans above that amount you'll still be providing personal guarantees and in some cases debenture. So a little bit of movement there. The main sticking point, of course, as I highlight in previous videos, is this thing that your business has to be viable. With a number of calls that we've received from businesses asking if they can apply for this loan, and I've really had to be telling them, unfortunately, looking at your figures, you're not going to be eligible. Reason being, the banks are taking the approach that if this was December 2019 and you had asked us for a loan, would we have said yes? If we said yes at that time, then we're more than likely to support you now. However, if in 2019 we would have said no, then regardless of what happened to this business concerning the coronavirus, we are still not going to support you because you weren't deemed to be viable even during the good times. So naturally, this is now dawning on businesses, as I said in the previous video, that this is not going to be the solution for everybody. So looking forward, what kind of changes can the scheme kind of make in order to make it work better for businesses? Well, I think we're going to see some minor adjustments as we go on, but the key thing is there are only 40 accredited lenders, and that is not enough when you consider how many businesses in the UK. Now, I've been speaking to most of the main high street banks who are on this panel, and they have said to me that they are inundated with requests from businesses. They cannot cope, and that's alongside requests from businesses who want repayment holidays on existing loans. Now, if you look where the banks are, over the last couple of years, they've continued to shed relationship managers. So they literally don't have the bodies on the ground to cope with the volume. So what needs to happen? Well, the alternative finance sector needs to come in. Now, I understand that many of them are looking to come on the scheme. Now, if the crowdfunders and the peer-to-peers come on, I think that's going to relieve a great bit of pressure. And if I was the FCA or Bank of England, well, I would say key thing, number one, for loans less than, say, £250,000, give that to all of the alternative lenders. They've got systems and processes. They can get money out so much quicker than the high street banks. I would then say the high street banks, you concentrate on loans £250,000 and above. That's where your skill set lies. Because the major complaint about the scheme is that the money is not getting distributed quick enough. That's because the banks are just not geared up for this type of deluge of volumes of inquiries that they are getting. And also, I said in previous videos, their mindset is different. Many really kind of start off with the answer being no, and then they work back to a yes. Well, certainly the alternative finance sector, they kind of start with a yes and then find reasons to say no. They're just geared up, as I said, better in terms of systems and processes to get that money out quicker. So there are a few things that really need to change on this scheme. So at least it's out there, but really the money is not getting out quick enough, and I am really concerned about how many businesses will actually survive if they have to wait 3 to 4 weeks in order to access the scheme. So going forward, I will be doing regular updates on how the scheme is developing. And if you do want to have a chat about this scheme or other forms of lending if you're getting declined by your bank, by all means, just drop us an email, info@businessloanservices.co.uk, and myself with the team will happily have a chat with you.
you.